Hi, it's Charlie giving you Monday's video, and I hope you're very well. I've got a question that came in. I think it was just as I went away. I was away last week, and so it was, what's that, on the 23rd of January. So just before I went away. So I thought I'd answer that question. I'll bring up the email in a second for you. One other thing I was going to mention is that a lot of people ask when we go away, oh, do you trade? Do you take time off? Not trade? Would you not look at the markets when you go away? And I think it's a very personal thing, but I do tend to look at the markets when I'm away. I'm still winding down and enjoying. I mean, I was skiing, so it's hardly a wind down, but yeah, I still have a look at them. Just via my phone. I don't take a computer away or anything like that. Just have a look at them. And in fact, last week did manage to capture some points. Fun enough, on the euro, which is what we're looking at here at the moment. But did manage to capture some points, and so if I can put some little swing trades in, then I'll do that whilst I'm away. But that's a personal thing. Other people like to take the break and not do anything, but for me, sometimes just looking at a chart off my phone which has nothing on it but a 50 period moving average and the 21 period moving average, then it brings you back to basics, and you look at the market without all the other indicators and filters that you might use. Sometimes just going back to basics is a good thing, and so you read the market in a different way, just going back to the price action and where we are relative to some prior highs and prior lows and things like that. So it was quite interesting actually. Yeah, so I'd get back from skiing in the afternoon, and Ali and I, a friend of mine who is also a trader, would be laying on the bed, and oh, that sounds wrong, doesn't it? We had a twin room, and looking at the markets, both retrospectively having a bit of a chat about them, and then both of us were doing a couple of trades whilst we were away. So anyway, if you do go away, and I'm not someone who says, oh yeah, don't trade. It depends on your experience levels. I think for less experienced traders, you're probably better off having the break. But for experienced traders, then why not? If it's not taking up too much of your time, you just have a look at the markets here and there. For example, I was looking at the Dow, and I put a trade on the Dow, but I'm not necessarily trying to be there and execute as the market is moving. I just put limit orders in, orders to buy or sell at certain levels, and then if they get triggered, they get triggered, and then we just see what happens. So that's what I do. I'm not having to be there watching it all the time. So I'd go off skiing and then come back and see what it's been doing later on. Anyway, that's that. Let's get on to this email, which I've obviously taken the personal details off, apart from his first name. So Dan, as we can see here, emailed in, and he's asked a question on trends. He's been consistent with his trending since the beginning of December. The markets have been trending, and it's relatively easy to buy and short retracements with small stop losses. You regularly mention the equity curve of a trader's P&L. They have winning trades, their account goes up, and then they become more complacent with their trading ability, and their account goes back down again through lack of focus or discipline towards maintaining a trading plan. My fear does not come from following my trading plan. My fear comes when trending markets turn into non-trending markets. How do you yourself distinguish when a market is trending? I remember something for a while ago about when the ADX being above 30. Anyway, if you could shed some light with myself and the rest of the community on a simple, straightforward way you discern when a market is trending or non-trending, would be much obliged. Right, okay, so let me just get rid of that. Yeah, I mean, I think that, again, it's a bit like what I was just talking about, is going back to basics sometimes when I'm away, and you're just more looking at a price chart. And I think let me see if I can clean this chart up, bear with me a second. Okay, right, so just taking some other moving averages off and indicators off. So we've just got a cleaner chart, and with just a 21 period moving average and the 50, and then there's the 200 up there. So it just brings it all back to basics, and we can very clearly see what the trend is. So I think first and foremost, I always use the basic is the 50 period moving average, and if we are above or below the 50 moving average, if we're below, then it's telling me the intermediate trend is down. And also with the 21, it's telling me whether the intermediate trend is down, because you could have price below the 50 but the 21 being above the 50. That would tell me that there's probably a bit of a mixture going on. So that would be the first thing I'd look at, and the other thing we'd look at is just, are we making lower lows and lower highs? So at least for now, until proven otherwise, the euro dollar here is making lower lows and lower highs until it breaks this last lower high up here. Now, why is it this one and not this here? Well, this lower high is not confirmed as a lower high until we obviously break to new lows. So the last lower high is actually here, because it's the last high point before we broke to new lows during this phase here. So that's how I would look at it. Really basic there. You can use an indicator like an ADX just to again confirm trend, but again that's another indicator. So I would always go back to basics and just say, okay, all of the time we're making lower highs, lower lows, then and the moving averages are, we're below the moving averages and they're facing down, then it's just confirming that we are in a downwards trend. And so that's what I'm always looking for when we're in trends. If we start retracing and I see us break above prior lower highs, if let's, for example, we're in a downwards trend, then that's always something that I'm going to be keeping an eye on and watchful of, because if we were to break that high, then it's possible that that there could be some more upside. Now, if we can actually take that down to perhaps a 4-hour chart. If I bring that up. Okay, so as we can see here, even on the 4-hour chart, it's still that high actually. We've got this high here, but it's really it's not that meaningful unless we'd have broken to new lows first. So that's a bit meaningless there. So let's actually go on to the pound dollar and see if there's anything different there. So first of all, let's take this back to a daily chart. So now this is interesting with the pound dollar, because what has actually happened is that this really is the last lower high point here, because we then rolled over and made new lows. And as we can see, the pound itself has marginally broken that, but we can see it's starting to roll back over again. So, but this is obviously an area of interest. So if you're a trend-based trader, you would still be trading with the trend at the moment, but you'd be watchful that if this was to start getting back up into the 151s towards 152 again, then it's likely that the pound is then going to go up and probably want to break that level, and then the next level would be this level up here. So just basics of price analysis and trend analysis. At the moment, the trend is still in. It has broken this little marginal high, like I said, that it made here before coming back down. This one's more important because it actually put in a more than a 1-bar rally, so to speak, over here. So this one is more important, but it's like a little sign that, okay, only if the pound was to come back up to that zone again, then I suspect that we would immediately want to then test this high, and then if we test this high, then we'd probably want to then start looking towards a retest of something like a 50-day moving average. But if you're trending and you're saying, okay, I don't know what to do, you stay with the trend until proven otherwise, until you start seeing the moving averages flatten off or the previous lower highs get taken out. Otherwise, the trend is in place. I hope that helps. Be back on Friday for live trading, and I think that's it. I could do some market analysis, but I don't think I really need to today. And we've already 8 minutes into this regarding this question. So hopefully that helps. Catch you later in the week.